For now, the message from Wall Street is clear. Political stability equals market confidence, and the S&P 500 is once again proving why it remains the world's most watched barometer of economic optimism. As futures rise and the government gears up to reopen, investors are asking one key question: is this the start of a new rally or just a temporary spark? Time and the next wave of economic data will tell. But one thing is certain: the markets are alive again, and traders are watching every move closely. If you want to stay ahead of the curve, make sure to subscribe, hit the notification bell, and follow our channel for real-time market updates, insights, and actionable trading tips. Don't miss the next big move in the S&P 500. The stock market is waking up to a wave of optimism this morning as S&P 500 futures climb higher following a major political breakthrough in Washington. Late last night, the U.S. House of Representatives passed a bill to end the federal government shutdown, sending a powerful signal to investors. The longest funding stalemate in recent memory is finally nearing its end. For Wall Street, that's a breath of fresh air. For weeks, traders had been on edge. The shutdown froze key economic data, delayed federal spending, and fueled fears that the economy might be losing momentum heading into 2026. But with the deal now moving forward and likely to be approved by the Senate, investors are recalibrating their outlook. The S&P 500 futures rose in pre-market trading, joined by modest gains in the Dow Jones Industrial Average and Nasdaq futures. It's a clear sign that market confidence is returning. Analysts say this move is about more than just relief. The end of the shutdown removes a significant overhang that had been distorting short-term market behavior. With the government back in action, critical agencies like the Commerce Department and Bureau of Labor Statistics can resume releasing data on inflation, GDP, and employment. Information traders rely on to price risk and forecast trends is now available. This restored transparency is already helping investors make more confident decisions. Sectors that were hit hardest during the shutdown, including infrastructure, defense, and technology, are seeing renewed interest. Defense contractors, for instance, could benefit from the return of government contracts and spending. Tech, while still under mild pressure from global chip supply issues, is also seeing positive momentum as investors rotate back into growth stocks. Meanwhile, energy prices have stabilized, supporting industrial and manufacturing equities. Still, not everyone is convinced this rally will last. Some economists warn that even though the shutdown's end is bullish news, the underlying economic challenges remain, from sticky inflation to global trade tensions and shifting interest rate expectations. The Federal Reserve's next move will play a critical role. If the central bank signals a dovish stance, hinting at rate cuts or a pause, it could give the S&P 500 the fuel it needs to break out of its recent consolidation zone. On the other hand, if inflation data comes in hotter than expected, the optimism could fade quickly. That's why many traders are calling this moment a relief rally, a short-term boost driven by policy resolution rather than fundamentals. Still, it's an important shift in sentiment, especially after weeks of uncertainty. Heading into the next trading session, all eyes will be on the market's open to see whether future strength translates into sustained buying momentum.